What is going on here? Walk us through it.
Sure. So private credit funds and private equity funds need cash. They've been slow to sell investments. That's a story we're all probably familiar with. This is one of the innovative ways that they're doing it. It's a universe called fund finance. They take shares of these funds, they put them into special vehicles, they issue bonds. So you're turning equity, the shares of the funds, into debt. In doing that, you enable a lot of investment into the fund, and that's exactly what they want. They need a new source of dollars.
Sounds perfect.
He said innovative.
Davide, come on in on this. Tell us about a specific deal that kicks off this story that UBS is up to.
Yeah, we've reported about a deal that UBS has proposed, similar one that Partners Group has executed already, where on top of everything that Scott just described, we have an insurance policy written by Nationwide that insures the majority of that transaction against losses. And what that does is it boosts the rating all the way up to A2. You know, these deals typically either are not rated, or if they're rated, they would get a mix of like triple B, single B ratings. So the insurance policy is what really turbocharges this transaction and gives it a much higher rating, allowing other insurance companies on the other hand to buy it more easily.
All right, so grade A2 from Moody's, the bundling, all of it. And yet you guys write in the story, quote, yet potential buyers needed only a few moments to flip through the presentation and realize, Davide, it was no routine deal. What did they see?
Yeah, I think the insurance wrapping, as this structure is called, is still quite rare in the world of fund finance. So you see a lot of transactions where there is the slicing and dicing in different tranches. Very few where a majority of the transaction gets a single A rating, like in this case.
Okay. Yeah, go ahead.
What could possibly go wrong, Scott? No, help me out here. I'm being silly and funny because we've all lived through the great financial crisis. And we just want to be smart here. We already, when we talk private credit, a lack of transparency. Now, those who issue private credit said, listen, you know, there are good private credit issuers and there are those who don't. And there are those who really are only going to get involved in really smart deals. So I don't know. There's so much money sloshing around that says to me there's going to be a lot of deals that don't deserve that top rating, or that rating of A2.
Sure. Yeah, a couple of things. For one thing, it's important to point out this deal was only a proposal, and so we don't know if it sort of reached conclusion, and actually Moody's and Nationwide say they did not have anything to do with this. So this was a proposal.
Okay.
What it shows you is there's an appetite for it. And they're doing different things. The other thing is, the purpose of this is to bring in insurance investors. There is a ton of insurance money out there right now. A lot of people are retiring, and they're buying annuities. That cash needs to be invested in something that's investment grade. This allows you to turn something into debt and then get it investment grade. That's the goal. Are there parallels to pre-crisis? This is a big question. It comes up a lot in structured finance, which is an area that I write about. And I would say it's worth paying attention to. And there are people that look at this and, you know, have some concerns, but there's a lot less of it going on than before, specifically the insurance stuff. Yeah, go on, sir.
Well, I was going to say, you say it's worth paying attention to. I'm getting a comment from somebody listening or watching right now. He says, this sounds wild to me only in a bull market, he argues. Is he right that it's wild?
It definitely shows you something that people are innovating. They really, really want to connect these two universes. On the one hand, you've got the funds that need cash. On the other hand, you've got the insurance companies that have cash. You need to connect them, and that's the financial engineering that's happening.
Okay, so Davide, come on back. Is this about investors chasing a good investment, or about an investment chasing investors because private credit issuers need to put money to work?
I guess you could argue it's a little bit of both. You can make a case that financial markets are there to distribute kind of risk and returns to investors who are willing to take it. So the point of structured finance and securitization is to do that and allocate risk. I think one issue that people have highlighted here is that if there is a proliferation of these deals and all of a sudden Nationwide is taking a lot of exposure in this type of transactions, they're actually creating a connection between two parts of the financial system that wasn't there before. So if something were to happen to Nationwide and their credit rating that has nothing to do with private credit or private markets, and they get downgraded, all of a sudden, all of the issuances that they have wrapped would get downgraded as well.
Carol, you always remind us about the rating agency's role in this stuff.
Well, is there the same?
You always bring that up.
Is there the same conflict of interest potentially?
The conflict of interest with you want to get business, you know you have an incentive to.
That's a yes.
Well, I mean it's there. I mean the ratings agencies, of course, have different divisions, and so in theory they're insulated from that. But I suppose it's an open question.
What do you think? We just got to wrap up and just got about 30, 40 seconds, Scott. You know, in doing this story, you and the team, what do you think our audience who listens to us talk about private credit day in and day out, what should they be kind of watching out for or take away from this, just quickly?
Whether we see the innovations continue to push into these new directions. I mean, this is not completely out of the blue, like we had seen these before. We're seeing more of it. We're seeing more of an appetite. So if we see continued more of the risk-taking in this area, in fund finance, that's something to pay attention to, for sure.
Davide, 10 seconds. Is UBS going to do this deal? Have you heard anything from them?
We've been told the deal is still in progress, and we'll have to see over the next few weeks and months. These are transactions that typically take a very long time to put together, so it's not surprising that it hasn't quite crossed the finish line yet.